Are you ready to wave the momentum in the stock market? But is it really worth the risk? Is investing in the Nippon India Nifty 500 Momentum 50 Index Fund NFO the right choice for your investment portfolio? Let us find out the answers to all these questions through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. Now, before analyzing whether investing in the Nippon India Nifty 500 Momentum 50 Index Fund will be helpful for you and be a suitable fit for your investment portfolio in the future or not, let us first understand a few basic details about this NFO. So, as an NFO, it opens on 11 September 2024 and closes on 25th September 2024. And some of its key features of the fund is it is an open-ended fund type. It belongs to the category of equity flexicap fund, and it has Nifty 500 Momentum 50 TRI as its benchmark index. There is no entry load as well as exit load in this fund, and the minimum investment amount you need to start investing in this fund is just 1000 rupees. And the fund manager for this fund is Mr. Himanshu Manje, and according to the riskometer, the risk involved in this fund is very high. Now let's take a look at the investment objective of this fund. So the primary investment objective of this fund is to provide returns that before expenses closely correspond to the total returns of the securities as represented by the underlying index, but it can be subjected to tracking error as this is an index fund. Now, speaking about the index, let's just take a look at the Nifty 500 Momentum 50 Index, which is the index this fund is representing. So now let's learn a little bit more about it. So the Nifty 500 Momentum 50 Index aims to track the performance of the top 50 companies within the Nifty 500 index based on their normalized momentum score. So the normalized momentum score for each company is determined based on its 6-month and 12-month price return, which is adjusted for volatility. So the stock weights are based on a combination of the stock's normalized momentum score and its free float market capitalization. And this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now let us take a look at the sectors represented under this index. So the sectors represented are capital goods, financial services, automobile and auto components, power, consumer services, consumer durables, construction, metals and mining, oil, gas and consumable fuels, realty, healthcare and chemicals. So the highest weightage of 31.20% is given to the capital goods sector, while the least weightage is given to the chemical sector by a weightage of 1.11%. So now let's move on to the top 10 holdings in this company. So the top 10 companies: Trent Limited, Bajaj Auto Limited, Adani Ports and Special Economic Zone Limited, Bharat Electronics Limited, Mahindra and Mahindra Limited, REC Limited, Siemens Limited, Hindustan Aeronautics Limited, Power Finance Corporation Limited, Tata Power Coal Limited. So in the top first position is in Trent Limited, which has a weightage of 6.43%, while the top 10th position is given to the Tata Power Coal Limited, a weightage of 3.51%. Now if you look at the data and the index returns as on August 30, 2024, based on the data and the graph, you can clearly see that in 1 year it has given a return of 69.51%, while in 5 years it has given a return of 35.77%, and since inception 24.97% return has been given by this index. So according to the graph, you can see that in short term it has a little bit more dips here and there, but in short term it has consistently improved and performed well compared to the short term period. Now, as we have understood basic details about this fund as well as the index it is representing, now let's move on to analyzing whether investing in this fund will be a good fit for our investment portfolio or not by analyzing the pros and cons of investing in the Nippon India Nifty 500 Momentum 50 Index Fund. So first, let us explore the advantages of this fund. One of the major advantages is the momentum investing advantage, because this fund taps into the momentum strategy, which has the potential to deliver higher returns by focusing on stocks that are already performing well in the market. So if you believe in the trend is your friend, this fund could be appealing to you. And also another advantage is the diversified exposure. So despite being momentum focused, the fund offers exposure to a diversified range of sectors within the Nifty 500 index, reducing the risk tied to any single sector. And another advantage is the passive management. So being an index fund, it is passively managed, which typically means lower cost and lower expense ratio and fewer fees compared to actively managed funds. And finally, one of the another major advantage is the potential for higher returns. So in bullish markets, momentum stocks tend to outperform, which could result in higher returns for investors during such periods. periods. So these are some of the major advantages of investing in this fund. Now let's move on to the potential downside disadvantages of investing in this fund. So higher volatility. Momentum stocks can be highly volatile, especially during market correction period. So this means the fund could experience significant fluctuations in value, making it a riskier option. And also it has sectoral concentration risk. While the fund is diversified, it may still be overweight in certain sectors that are performing well, which could lead to higher risk if those sectors face downturns. Another drawback is the chasing trend. So momentum investing sometimes means buying stocks that have already surged, which could lead to purchasing at high valuations and potentially lower future returns. And finally, the most important part is the limited downside protection, which is since the fund is passively managed and momentum focused, it doesn't actively seek to protect against losses in bear market. So if momentum fades, the fund performance could also suffer. So these are all the potential downsides of this fund, and you can even understand that these are also the potential risks you might be undertaking if you choose to invest in this fund. So you need to carefully go through those factors and see if it aligns with your investment objective and see if it will be a good fit for your investment portfolio or not before choosing to invest in this fund. So finally, what is the final takeaway from our analysis of the Nippon India Nifty 500 Momentum 50 Index Fund? Will investing in this will be a suitable option for investment portfolio or not, or will it help us build wealth in the long run or not? So as you can see from the analysis of the pros and cons, that this fund offers the potential for high returns by capitalizing on momentum stocks, so making it an attractive option for investors, especially with a higher risk appetite. So however, its reliance on market trends means it can also be volatile and may not provide strong protection in downturn period. If you believe in the momentum strategy and are comfortable with the risk associated with this fund, then this could be a good fit for you. However, for conservative investors not willing to take a lot of risk, it might not align with your need for stability and lower risk. But overall, it completely depends on you and up to you as the investor to decide whether investing this will be a good fit for you or not. Because before investing in this fund or any fund, you need to understand and see if it aligns with your investment objective, your risk profile, risk tolerance, and your asset allocation to the investment portfolio in the time horizon of your investment goals. So you need to see if all these factors align with your goals. So you need to see and completely decide whether this will be suitable for you or not. So it's completely up to you as an investor. But from our personal opinion is that this index fund might be suitable for an ultra conservative investor who's not willing to invest in actively managed funds. So because compared to actively managed funds, it has a lower risk, but still even then there are similar index funds that have a lower expense ratio and a lower tracking error compared to this fund. So if you still want to invest in a similar fund like this, you can go for one which has a less expense ratio and less tracking error. And also if you're willing to take a little bit of high risk, then you can definitely invest in actively managed funds which has the potential to deliver higher returns compared to this fund. In actively managed funds, you have the ability to fund allocate dynamically, and you have the ability to beat the market in terms of returns as well. So if you want returns that can beat the market, or if you want dynamic fund management, then actively managed funds are the one to go, because index funds only try to replicate the performance of the index and it tries to match the performance of the index. So you cannot change the fund allocation based on market conditions, or you cannot even expect returns that can beat the market. It will only try to perfectly match the index performance as much as possible, but even then tracking error is possible, so it can also not be guaranteed. So there's also that. So if you want something like this, then actively managed funds are the way to go. And finally, you should see if it aligns with your risk tolerance and stuff like that. But if you're still struggling to decide whether investing in this will be suitable for you or not, then you can definitely go for it with a professional guidance. So you can consult with a certified financial planner who will see the suitability of this investment objective of this fund, the risk profile of this fund, the overlap ratio of this fund and between your investment portfolio. So they will also be able to see what kind of allocation you need to give to your investment portfolio, and they will see all kinds of suitability to your investment portfolio and then suggest investment options for you and customize investment strategies for you, so it can make your investment journey more simplified and easy and hassle free for you. So investing through professional guidance as well can also be very helpful for you in your future.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, We also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.